So, a bit of news from last week is that the Financial Services Compensation Scheme is set to, the limit set to increase from £85,000 per person at the minute to £110,000 per person. This essentially is the amount the government will protect, was brought in post 2008. But, Martyn, tell me a bit more what it actually means for people and their savings and what it doesn't protect.
No problem, Kez. Well, let me give you, for people watching, let me give you an overview of what the FSCS, the Financial Services Compensation Scheme, is and what it does. It's what the regulator, the FCA, likes to call a deposit protection scheme. And it's actually funded by the rest of the financial services industry. It's not optional. It's part of what they have to do as part of their regulatory status. So the bigger the company, the more money they have to put aside. And the whole principle of all of this is sometimes businesses go bust. Now, we all like to pretend that banks don't go bust. Because I'm 5,000 years old, I actually remember the last time round when this actually happened. I was working for the Financial Ombudsman when I noticed over the road Lehman Brothers gathering in great big offices before they were seen wandering out with, bags containing the plant pots and things like that. So I have seen financial crashes. I've watched organisations like Northern Rock go under, and there was a very real sense of fear that actually this is something that could happen again, as difficult financial circumstances have come along. So that's why we need a deposit protection service. But there are always limitations with how these things work. Now, what's being proposed here, and it's really important to kind of get this across as well, because there's always a caveat, isn't there? When it comes to these things, these are currently proposals from the Prudential Regulatory Authority, which is linked. So again, the Bank of England has specified that. So the PRA, the Prudential Regulation Authority, is proposing that this limit will raise from currently £85,000 to £110,000. So what does this mean for you and I? If we've got money saved or simply held within a bank or a deposit taking facility, there's lots of different things that could be incorporated into. But basically, if you can stick your money somewhere and keep it there or use it to get interest, like a savings account to a building society, a few other things along those lines as well, you will be protected if that business goes under to a maximum currently of £85,000. So if you've got 110,000 in at the moment, you're going to lose a chunk of that money. The maximum payout is £85,000. However, if there's two of you, if it's a joint account, you get double protection. So it's double the money on that one as well. And on the FCA website, there's a whole guide to how all of this works. Now, so this is going to raise, hopefully, to £110,000 per person. And that's not because of a sudden outpouring of generosity from these regulatory authorities. It's simply to reflect the fact that since these limits were introduced, the world has changed, inflation has increased, and the value of that money that we have put to one side will change. So that's simply moving the amount that's protected up to reflect what was £85,000 is closer to in this modern day and age. But there are some catches as well. Nothing is as straightforward.
So, I mean, does this actually matter today? Because this came, I think, was this Gordon Brown who brought this in 2008, 2009 to when Northern Rock people were queuing up outside Northern Rock to get their money out. Does this matter today? I haven't seen a bank go bust in a few years. Should I be worried, or do I actually need to be a little bit more savvy? And if I do have £85,000 or 110 or even more, I should move it around to different accounts to make sure it's all protected just in case.
What you just said, you're absolutely spot on that one. So all that this is saying to people, I mean, the FSCS has been around for a long time. It really came into play. It was created around about the turn of the millennium, which makes me sound even older, when the current batch of the financial services regulations first kicked in properly. That created the Financial Ombudsman and ultimately the deposit scheme, the FSCS. Now, it is necessary. All that it's saying to people is, in the same way that when you have investments, you're encouraged to have a diverse portfolio, which basically means you can have some risky bits if you want to, but also have some safer bits, some gilt, some other investments to spread that risk. This is a much more basic way of doing that. What it's basically saying is, if you've got lots of money in savings, don't just put all your eggs in one basket. So if you think that the limit is currently £85,000, or double that if it's a joint, have a look at moving that money around. If you've got more money than that you want to keep in savings, then use different organisations, different regulated UK businesses in order to do that. But here are some of the catches to watch out for. The protection is by business group. It is not by business brand. So if there are a number of organisations that are part of the overall same business brand, then you would not be covered. It is the individual, the brands, the overall parent company. So make sure that you check out what the organisations are. If they are all part of the same business, then you might want to move further afield. Next up, older viewers may recall that there was an Icelandic bank scandal. Gordon Brown, of course, was all part of that as well. I once went on holiday to Iceland when the Icelandic banks collapsed, and there was a big picture of Gordon Brown with some very rude words written all over him in a shop window. And I had to put on a French accent for the entire time I was there, just in case Icelandic people tried to run me over. But what happened with that whole Icelandic scandal was the fact that the Icelandic banks were very heavily encouraging people to invest money abroad. And because these adverts popped up in the early days of the internet, and people were seeing them everywhere, they assumed that they had the same deposit protection. But unless a bank is regulated, or by a building society or a financial savings institution is regulated as that in the UK, you do not have that protection. Another country might have similar protections, but you are obliged to go through that. So make sure that you're dealing with a company that's regulated in the United Kingdom, and you can check that on the FCA website or phone up the helpline. They love that, just to see what they say about that as well. But one other word of warning as well: if this increase does happen, and we haven't got a timescale on precisely when that might kick in, you also currently have a protection for £85,000 with investments and pensions, and also you have that protection with types of insurance. This doesn't mean general insurance policies. This means the type of assurance where you put money to one side and it builds over time. Usually life assurance is where you see this most often. Those protections are currently 85,000, but this is for deposit protection. We're not seeing an increase in those as well. And again, one last word of warning, because there are so many catches. This kind of thing does not protect investment returns. So investment returns go up, go down. You could lose some or all of your money. The FSCS is not there to protect you for up to £85,000 if things go awry. This is simply about the money that is retained as deposits. It is not about investment returns. So just a few things to bear in mind. It's great to have it, but don't make any assumptions. Go onto the website and find out what you're covered for.
And I'm assuming if I'm in a situation where I've got £85,000 to invest or to save, probably speak to a financial advisor anyway, just to make sure that I am doing the right thing for my money and my financial goals.
Absolutely. Well, if you have got £85,000, you can take me out for dinner first. But after that, I would strongly recommend speaking to a qualified financial advisor to find out the best ways to place your money. There are lots of options that are available to you, but always do a bit of research just to see about the stability of the institution. You mentioned before about some of the risks that might be involved here. If you think about it, some of the best savings rates that you can get at the moment, certainly that I've seen to looking online, are with newer digital only, in other words, online only businesses. You'll see some of the, some really great rates for notice accounts where you put money in for 5 months, a year, 5 years, and you will get particularly good rates, but you will lock that money away. You can't touch it, even if it's an emergency. And these are the institutions where people are going, oh, could that go under? We simply don't know. It's highly unlikely, but it makes sense just to double check who it is that you're dealing with.
Yeah, definitely. I think one of the things I see a lot on TikTok and on YouTube with people saying, oh, I've got my emergency fund in a high yield savings account. It's like, just so long as you can access it in an emergency, because there's absolutely nothing worse than if you actually have an emergency and it's locked away for 6 months.
Oh, absolutely. Yeah. And just once again, just to remind everybody, whenever I talk about these things, I get loads of people asking me about crypto. Firstly, please don't. And secondly, if you are going to invest in crypto, crypto is not liquid. If there's a panic, if there's a run, you need to bear in mind that where people have lost money in the past, it's because they simply can't get their assets quickly. So it's not just about investing in crypto and looking at a lovely graph telling you how much money you're making. It's about getting it out quickly if there's a problem. So that's something to be aware of. And one last word of warning, consumer credit products are not covered by the Financial Services Compensation Scheme. It was considered that this was something that might happen. Now, you might think, why on earth, would I be losing money with that? Well, sometimes people are, might be in the process of paying back money, particularly if money is tight. You might be in the process of paying back a company that could go over. You mentioned before, some circumstances where organisations like Wonga, remember them? Payday lenders, tons of those went suddenly bust when that market collapsed. And lots of people lost money because they were paying back debts. Some of those debts were sold on to debt collection agencies as well. So actually, it is worthwhile bearing in mind that if you are dealing with a credit product, that isn't covered by the Financial Services Compensation Scheme.
Interesting. But if this all goes through, are we saying good news for consumers?
Absolutely, yes. Anything that provides a little bit of confidence and security in the system. And it's worthwhile bearing in mind as well that even though some businesses do kind of have a little bit of a moan about it to me privately, sometimes not even privately, about this, the reason why we have this kind of scheme is to give people confidence in our UK financial services. This isn't kind of like Battle of the Quangos. This isn't terrible red tape holding us all back. One of the reasons why people keep so much of their money in savings in the UK as opposed to moving it abroad is because we have that level of protection, and that makes us have a much stronger financial services sector than many other parts of Europe, for example.
Interesting. Well, look, some other good news for a lot of consumers is the Renters' Right Act that has come in 2025. This appears to be something that Labour government has been very proud of introducing. Han has done an exceptional job of not making it very clear what it actually covers. So be the Labour Party spokesperson for me for a second and explain what the Renters' Right Act is, what it's going to protect, how it's different from how renters' rights were, three months ago. Because I'm a homeowner, means absolutely nothing to me, but this time 7-8 years ago would have been very, very interesting.
Well, absolutely. Now, this is such an interesting one. I recently wrote an article about this very subject, and it took a huge amount of time to research and to clarify with the government. And so, you thought we had caveats before when talking about the FSCS. This whole thing, I have to say, the whole thing is one great big caveat because we're still waiting to find out precisely how it will work. First things foremost, the Renters' Rights Act introduces a couple of key things that actually protect tenants in the rental sector. There are some protections for landlords there too. A bit contentious about quite how much protection landlords are getting versus the people who are renting off them. But actually, it is what's being offered here is very, very important. And top of the list is a ban on what's known as no-fault evictions. And now this is where your landlord is entitled to ask you to leave the property and they don't have to give you a reason for doing so. And all they need to do currently is give you 2 months' notice. Now, no-fault evictions are intensely complicated and intensely controversial because, of course, if it's ever happened to you, and it's happened to me before in the past, then though you literally have no way of appealing them. It also matters because if you have a difficult landlord or one who isn't fulfilling their obligations, and landlords currently already have to meet lots of legal requirements, they can still get you out for being difficult, and there's absolutely nothing you can do about it. So a lot of the people in the past who would contact me about concerns about black mold, for example, or about dangerous wiring or unsanitary conditions in the rental properties, I used to have to advise them, yes, the law says your landlord does have to tackle this. This is what you can expect under your contract. This is what you're entitled to. But the landlord could still turn around and go, that's nice. Anyway, it's time for you to go now, and could issue you with a Section 21 notice. That is a no-fault eviction. Those are now being banned. Your landlord can still evict you for a range of reasons, but a lot of those now will relate to your behaviour, your failure to meet the terms of the contract, not maintaining the property well, not paying bills, being late on the rent, antisocial behaviour, all of the things you would expect people to, to get threatened with being kicked out for. The big one, though, here is can your landlord still, take the house off you if they decide they want to move back into it? And yes, they can do. That is allowed under the sets of circumstances that we're talking about here in the Renters' Rights Act. But the key issue here is they now have to give you notice at the end of a year, and they now have to give you 4 months notice. So before, just 2 months notice, once your contract period had ended, and then they were straight into, and they could do, if you had a year contract, they could notify you at the 10-month point, and you'd be out by the 12. Whereas now, minimum of 12 months, if that's how long the initial agreement was proposed, and they still have to give you 4 months notice on top if they want to move back in, or if they want to sell the property. Now, this all sounds very good, but Ed, these more astute amongst the viewers will be going, hold on a second, can I fiddle that? There are ways around it. And the answer is yes. I'm not going to tell everyone precisely how to do that, but there are gaps aplenty in all of this. And actually, this is the other issue to really get across to people at the moment. It's been such a long battle to get this onto the statute books. The law has received royal assent, which basically means it's gone to the king and he said yes. So it is officially a law. However, what lots of people don't realise about the law is these things are introduced over time. So a lot of these clauses are not due to come in until probably mid-2026. We'll get a lot of further announcements. And it's not going to happen in one big announcement. It's going to happen in little chunks. Yep. So you'll be hearing bits about this. So now is not the time to start sticking 2 fingers up at your landlord and going, you have to do this. They can still kick you out right now. So play the game for the time being and wait and see what happens.
And away from the kind of the act itself and the legal intricacies, what do you think this is going to do to the market? Because obviously, protecting private renters has been a big ambition of the government, mainly because there's not a lot of social housing to go around, so they've had to introduce more protections for private tenants. But do you think this is going to have a knock-on impact to private landlords as well, and people who maybe have an extra property that they're renting out as an income in retirement, and those people are no longer going to exist, and instead it's just going to be big organizations that manage lots and lots and lots of properties, and you basically become a number on a screen? Do you think that is a genuine risk with more and more red tape being brought into the private rental sector?
Yes, absolutely. I mean, as a consumer rights journalist and broadcaster, I think that the Renters' Rights Act is a really important bill, but like all kinds of bills, we have the law of unintended consequence that also follows along with it. And landlords are being hit with, many whammies, for want of a better word, at the moment. So it's not just this, it's a culmination of things that are actually having an impact. So landlords are already having to pay more in tax, they're already having to pay more in fees, and with bureaucracy comes, challenges. So the more that they're squeezed, the more they are likely to relinquish their properties. Now, the more optimistic will say, well, that's great. That's another house. That's another flat going back into the housing stock. But speak to anyone under the age of 40 and they'll tell you that it doesn't matter because they can't afford it anyway. They can't. The system at the moment means that they're unable to buy it. So as you say, that property will either be snapped up by somebody who is wealthy or has wealthy parents, or it will potentially go to one of the big landlord agencies. And it's worthwhile noting that they are the ones where we've had the problems in the past. They're the ones who've been threatened with fines, the ones who are constantly being warned about their poor behaviour. And that is a concern. So, yes, we could see an increase in the cost of renting, which is terrifying for, if you're living in London, you're probably already paying getting on for half of your earnings in rent at the moment, or you're living in a multi-capacity property as well, which is also horrible. And all around the UK, in Manchester, which is often cited as, the northern powerhouse, rents are approaching 40% of earnings. It's the same in all of the big capitals around the UK, and sometimes even into smaller villages and towns as well, where people are simply being priced out of the market. And that's because we have a wider issue with housing stock, which isn't being resolved by this whole process. But also as well with any degree of, complexity, with, further requirements on landlords where they could find themselves prosecuted, there are other issues as well. It's worthwhile pointing out that private landlords who are already who might be struggling will be turned off by the factor of, it being harder to get out a difficult tenant. So as I mentioned before, you can still be kicked out for antisocial behaviour, but with many more cases reaching the already overlogged legal system, then it's likely that the courts will get bogged down. There'll be delays of years or more. And that also can have an impact on you if you're renting and you're stuck with an absolute nightmare neighbour next door who you simply can't get rid of because the courts can't get through that whole process in time. So there are lots of potential problems that could arise here, and we're still waiting to see how the government is proposing to sort those out.
The other issue that I think needs to be solved in property as well, particularly those who want to live in cities, is those who have bought flats and then are subjected to a management company. This is something that happened to me buying a flat in East London, and the management company raised our fees from about, we'll use kind of crude figures, but about 12% of the cost of the mortgage every month went towards management fees. By the time we left, it was 50%. Just that year-on-year increase. And it appears to be across the board. These aren't small independent companies that control just a few blocks. They control estates across the country, and they have an exceptional. It's almost awe-inspiring how they can be so uncontactable over certain things, and that seems to me to be the next issue for a government to solve, because private rental is obviously a challenging situation, particularly if you're from the landlord perspective might have difficult tenants, and then from a tenant perspective might have difficult landlords. But then if you are able to get onto the property ladder, of which you then got a very illiquid asset, you're then dealing with a management company that you're then stuck with for multiple years, that have a noose around your neck theoretically and financially, because they appear to be able to rewrite the rules every 12 months.
Yeah, absolutely. And this is the number one question that I get from homeowners, is about, that and the horrors of the freehold system. Now, that is under investigation, but management companies, it's exceptionally complicated at the moment. My top tip, if you are considering moving into a new property, is to find out more about the residents association. Now, there can be a mixed blessing, because some residents associations are a microcosm of society with power crazed people running rampage and all kinds of mutterings going on. But a strong residents association is brilliant, because even with new build properties where you think that you're locked in permanently with a management company, you can vote out the management company if enough of the residents agree to do so. So have a chat always and find out what the residents association is like, and how they feel about current service charges, because that's your way out. It's not straightforward, but it is doable.
Okay, great tip there. I wish I knew that 4 years ago. But there's been a way out for car finance buyers and people who particularly bought certain car finance products, which have exploded in popularity in the last few years. It appears to be one of the products we've imported from the US, and are now seem absolutely unable to buy a car in cash anymore. We have to buy it brand new, and we have to buy it on finance. But now the FCA has ruled for this mis-selling car finance mis-selling scandal, likely to affect 14 million people at approximately 700 quid a head. Tell me what exactly is going on, because I know you've got very strong feelings on this.
So car finance, before we even get started on the compensation scheme, let's talk about this, because what you're referring to here is the delightfully named PCP car finance. This isn't the drug. This is which is illegal. This is the type of personal contract plan. This is the type of finance deal. This only emerged around 2013, but has become the dominant form of what used to be known as hire purchase. It drives me mad as a commentator talking about this issue on the telly, because usually I can talk about pensions, I can talk about self-invested plans and investment portfolios, and I can do it in my allotted 3 minutes. Trying to explain how these contracts work is immensely difficult, because it's a form of credit, yet there's a down payment, there's a balloon payment if you want to buy it at the end, there's forms of insurance that are added on, there's mileage limits, caveats are plenty, and it's all being sold by car salesmen. So all in all, the whole product has always deeply concerned me anyway. What's happening here is our old friend commission. Now, the best analogy I can use is back in the day, if you remember, the last really, really big mis-selling scandal was the PPI insurance, the personal payment protection insurance that ended up costing the industry somewhere in the region of £64 billion for these mis-sold products. Not quite the same, doesn't work in quite the same way, but a lot of the PPI issues were in relation to commission. That is the payment that was made to the broker from the lender for flogging something, usually at an inflated price. What's happened here with these car finance deals, and there are many variations of them, is it was found that certain companies were paying excessive amounts of commission, over 50% of the total cost of the loan, for example. This was the one that the Supreme Court recently upheld, was an example of a mis-selling, though they threw out some of the other issues that have been put to them. In other sets of circumstances, an incentive was offered to the brokers. So if they were going to sell you the credit part of the deal, they could sell you the loan at 8%, but if they sold you a loan at 10.5%, then they would get the markup on the interest rate. Now, again, car salesman, I'm not disparaging you, but that's a good deal, you know. If you're
I will.
So the fact of the matter is, though, a lot of people were saying, well, you know, that's just basic economics. That's how it works. The issue here is, were you told? Did someone tell you that there was the option of paying 2 or 3% less? And actually, there's absolutely no benefit to you as a consumer. Did your documents say? Because many of the documents simply don't mention commission at all under any sets of circumstances. And those that did were highly vague about it. They might say that a payment will be made, which goes without saying, but not the size, the scope of it. In some cases, you know, it was like 2/3 of the loan, some of the ones that I've seen. So it's incredibly difficult if you dig out your old documents now to know if you have been missold. And some of the deals were simply unfair. So the FCA looked into all of this, and after lots of discussion, many consultations, and me slightly losing the will to live, they actually came around with a proposal for a compensation scheme. But don't relax just yet, because this is still a consultation. Last week, it was just extended by a little bit more because the industry wants to say a little bit more about it, as you can imagine. So we're expecting the details of what this compensation scheme will look like in probably February or March of 2026. As you say, on average, the FCA has worked out that the average amount of compensation for the affected people would be somewhere in the region of £700, but that's going to vary enormously depending on the size of your loan, the vehicle that you bought, and all of those things. It's 14.2 million people they think it's going to affect. And it's so sad that I know these figures. This is how you might do all of this. And it's approximately 44% of all car finance deals sold between a certain point in 2007 right around to 2021 and even into 2024, depending on the type of loans that we're talking about. So if you were sold a car finance deal between 2007, 2021, and possibly a little bit later, then it's possible that you're roughly one of the half of people who will be affected and will receive compensation if it was found that the commission that was charged was inappropriately high.
And I'm assuming, because I get bombarded with adverts from people saying they'll check on my behalf, that's the route I should go down. Is that right?
Absolutely not. And thank you so much for flagging that one up for me. And you know this anyway, Kez, but you're absolutely right. Once again, you know, I would hark people back to the world of PPI compensation. These companies are known as claims management companies. They are regulated for financial deals. You can actually go to an ombudsman about them if you think that you've been missold or tricked. It's the financial ombudsman who actually looks at these. But these companies, they offer to bring the complaint on your behalf. Now, if you really can't be bothered, then you know, you might think, well, why not? But you are basically throwing your money away, because they'll take, you know, 20%, 30%, maybe even more to bring that complaint on your behalf. Lots of people say to me, well, I'm using one because I can't remember the name of the firm. Well, neither can they. They need you to tell them the information. So they're not doing any work that you're not going to have to do yourself. The forms that you fill out are exactly what you'd have to go through as part of this compensation scheme anyway. So don't throw your money away. There's a much easier way to do this.
Yeah, and there's the FCA DIY form. Even though I think the FCA have said do the DIY form, it's fairly straightforward. It shouldn't take much time, and it's free, isn't it? That's the.
It is free, yeah, exactly. There's loads of guidance on sites like Money Saving Expert. Consumer Voice, they've all got free template letters. The advice at the moment is, you will be contacted if you are affected. But of course, we all move house over the years. So don't assume they'll find you. You can actually start making a complaint now. There's lots of advice on how to find the loans, maybe looking at your credit file to see if there's any record of those that are still there. If it was a big dealership, contacting them, though. Some of the dealerships have not been behaving very well so far, unsurprisingly. But there are ways to pursue it. You do not need to pay someone to do this complaint on your behalf.
I have two big issues with this. The first one being is that when I bought a 7-year-old Land Rover Discovery Sport, found the one I wanted, I phoned the second-hand dealership and I said, I've got, I can't remember what it was, £17,000 cash. Can I come and have a look at it today? No, I've got 6 finance buyers.
Yeah.
And this is, and I thought, this isn't good, so, that's bad because it's not even people buying new cars, they're buying old cars on finance as well, which obviously the ongoing maintenance costs increase and the risk increase. But the second thing that I'm really concerned about with the compensation scheme, it's not good for people and protection, and people should be told fairly. It's not going to change habits. Cars are a massively depreciating asset. They're taking more and more of people's discretionary spending, and it's locking people in. And I see so many people say, oh, well, everything's a subscription these days, Spotify, my films and all this. It's like, well, your car is as well. These people have essentially got a car on subscription. Very few own them. Very few know what it takes to own them. And the beauty of having something you own is if things get really tough, let's say you lose your job, you no longer have to commute, you can just sell it. These type of products don't allow people that liquidity and that flexibility within their life. And that really worries me because there's we've undergone a really big cultural shift in the way that we buy cars. And my worry is this isn't for the best for people's personal finances and for their long-term goals.
I agree with you. I think I've long had concerns about the products, and the irony is this isn't what I anticipated the complaints were going to be about. My issue was the fact that I thought a lot of these loans were missold because people were told that because of the way that the agreements were structured, that you would get to the end of the deal, but also you'd have built up a certain amount of credit which you could then use as a deposit for your next vehicle. And that almost, in fact, I've yet to see an example where said credit materialized. It simply didn't. And that's because over the process of time, the car dealerships knew precisely how much the vehicle would depreciate in value and exactly what it would be worth when you came to trade it in, because there's all the scuffs, the bumps, there's the mileage, all of those other things where they could get you. So I think the products were fundamentally missold in the first place. And the other thing that I really hate about it is we're still told that these deals are hire purchase, and they're not. Hire purchase, for very old viewers, ask your parents, is where you basically you had an item and you paid money for it over a period of time. But if something happened to that item, the company that was selling it to you was responsible for the maintenance of that item. So a hire purchase car deal meant that if your car packed in, the company that you had the deal with was responsible for making the repairs to the vehicle. Not with PCP loans. No, you are responsible for the costs for that, even down to damage. And I think what's particularly outrageous is many of these companies sold insurance policies to cover you for nicks to the windscreen, for damage to the hubcap. So they were basically selling you insurance policies and hundreds of pounds worth of insurance policies for things that you should have been covered for anyway. And I think that's outrageous. So I don't think that this is the end of the reckoning with the car finance industry. I think your perception of what may happen here, Kez, is very astute. This is not the last we've heard of this. This is a complaint about the misselling and the abusive commission. But the way that these loans work as well needs to fundamentally change, because if I'm struggling to explain it, how on earth is the average person on the street who isn't a money expert, how are they going to understand what they're getting into?